Hey guys, welcome back to our YouTube channel CA Made with Logic. So this is your friend mentor CA Ashish Jain, your audit faculty. Welcome to the world of auditing. So today we will be revising chapter number 5. Many students find this chapter very difficult because here the content to remember is very lot and they don't know how to remember the things and write it in the examination. So nothing to worry, if you watch out this video, I can surely say that this will going to help you a lot because I have created a logical flow to remember the things and many storylines I have created. Just let me show you. Okay, so practically we will be learning out the things, so nothing to worry, you just keep watching the video. And definitely it's my promise that this chapter will be one of your favorite chapter in the entire audit if you watch out this video till end. And if you're new to our channel, please do like, share, subscribe and comment and let me know how the video is. So let's start discussing chapter number 5, audit of items of financial statements. So there are total 23 topics you have to do in this entire chapter. One is 17, which is covered in the segment 1, and another one is segment 2, statement of P&L. 6 things you have to cover. So total 23 things you have to cover in this particular chapter. And I'll be quickly revising only the important concepts which are important from examination point of view. I'll not be going to discuss the introduction of financial statements and audit. This is not an important concept. Okay, so meaning of assertion is very important concept. Learning the definition of assertion is very important. Okay, so assertions are nothing but representation by management. These are explicit or otherwise embedded in the financial statements. Representation by management are nothing but they are the feelings of the management. They are the things which want to convey by the management, which are embedded in the financial statements. It can be related to asset, liability, equity, income, expenses and disclosure. These are used by auditor to identify potential misstatement. Okay, there are total 6 types of assertion which we will be going to see one by one. Okay, so types of assertion is the concept number 3. Completeness talks about the transactions and the items that are recorded or not. Okay, whether the transaction have been recorded or not, it talks about the completeness. Okay, then comes cutoff is nothing but transactions are recorded in the correct accounting period. It has to be recorded in the correct accounting period. For example, it has to be recorded this year, not the next year. Okay, so the correct accounting period talks about the cutoff. Okay, then comes existence and occurrence are both the same things. So asset and transactions are actually occurred. Okay, though, so when the transactions are actually been occurred, it talks about the existence. Then comes valuations are nothing but amount are correctly measured or not. Okay, amount are properly been recorded or not, talks about the valuation or the measurement. Rights and obligations are nothing but entity owns or owes. Okay, entity one is the owns, that is called the rights. Obligations are nothing but owes. Okay, owns and owes. Okay, then comes presentation and disclosure, talks about proper classification, description and fully disclosure. Okay, so these are all the things which we have discussed it. Okay, then comes assertion related to income statement. In income statement, revenue things are there, expenses things are there. So income statement is nothing but P&L. Okay, what are all assertions an auditor have to look for in terms of P&L statements? One is the occurrence, another one is the completeness, cutoff, measurement, presentation and disclosure. So these are the 5 things which an auditor have to look after assertions related to income statement. Okay, I have already discussed what is meant by each and every point. Okay, we will not be wasting further time. Okay, then comes assertion related to balance sheet items, which is nothing but asset, liability and equity. These 3 things, what all assertions auditor have to take care. One is the existence he has to take care, completeness he has to verify, cutoff, valuation, rights and obligation, and presentation and disclosure. So these are the 6 points which an auditor have to verify things with respect to balance sheet assertion. Okay, then comes to the main important topic, which is nothing but balance sheet share capital. Okay, here the objective of this share capital is existence, completeness and valuation. These three things an auditor have to verify to say that the share capital is very much accurate and everything is proper. Okay, so audit procedure related to share capital is, first he need to tally period end balance. Okay, auditor have to tally the period end balance with the previous year audited financial statement. This means that all the closing balances, okay, auditor have to make sure that they have been brought forward properly as an opening balances. Okay, the figures of closing balances are properly matching with the opening balances. Okay, this is what this point says about. Okay, then comes, if there is no change during the year, then obtain written representation from company secretary. If there is no change, okay, that means the balance sheet related item share capital, if there is no change in the share capital, you will going to obtain written confirmation from the company secretary. Very important. Okay, then if there is changes occurs means if there is change in the paid up share capital, auditor have to first check that whether the paid up share capital is within the authorized capital. Okay, you have to verify, auditor have to verify and see the memorandum of association, and he has to check whether the paid up share capital is within the authorized capital. If there is any change, okay, then he need to obtain certified resolution if there is change in the capital. Certified resolutions are nothing but board or shareholders meetings minutes he has to take and he has to check it. Okay, then for fresh issue, okay, auditor have to check compliance with Companies Act related. Okay, so whenever the company issue fresh issue of shares, auditor have to verify return of allotment, minimum subscription, minimum application money, separate bank account should be there, underwriting commission under section number 40. Okay, and auditor also have to make sure that there is no shares are being issued at a discount. Okay, no shares are being issued at a discount. There is one exception to the point, which is sweat equity shares. We will be studying it over here, nothing to worry. Okay, then comes, check whether shares are being issued for cash or consideration other than cash. Other than cash means, for example, you are giving shares to the promoters or underwriters in exchange of intellectual property rights or know-how. Okay, then comes, auditor will going to verify the SEBI regulation and guidelines compliances. Then comes obtain and verify form related. Okay, so MCA related form number SH7, auditor will going to obtain from the client, from the management, and he will going to verify. Form pass 3 he will going to verify, which is related to return of allotment. Then RBI related form is also there in case of FDI, that is foreign direct investment. If the company have made it, then definitely they will be verifying all these forms. Okay, then verify number of securities issues and how much securities has been issued, what is the issue price. Okay, then comes for increased share capital. Whenever there is an increase in the share capital, auditor will going to check the correct calculation of the fees of stamp duty payable to the MCA. Whatever correct calculation of the fees of stamp duty has to be paid, it has been properly paid to the MCA or not whenever there is increase in the share capital. Then comes shares are issued at a premium. Okay, so what does it mean by shares are issued at a premium? Shares are issued at a premium when they are issued above the nominal value. Nominal value is nothing but the face value. For example, the nominal value is rupees 10 and the issue price is 15. So 5 rupees, the difference between both the things, which is 5, that is called as a securities premium. That is called the premium amount which has been charged by the company whenever they issue the shares. Okay, so whenever the shares are being issued at a nominal above the nominal value, as per section number 52, amount goes to the securities premium account. Okay, so there is no restrictions, there is no restriction on issue of shares at premium. There is no restriction, but only one thing you have to remember is there is restriction on issue of shares at a discount. Okay, there is restriction. Okay, whereas in case of charging premium, there is no restriction. For reduction of share capital, securities premium account, treat it like a paid up share capital. Okay, that is, this point is not that much important. Then comes permissible use of securities premium account. Okay, so the securities premium account balances, for what purpose you can utilize that securities premium balances, this talks about this particular thing talks about that. Okay, so issue of bonus shares, fully paid bonus shares, you can utilize the whatever balance is been left in the securities premium account. Then you can write off the preliminary expenses. Preliminary expenses are nothing but incorporation expenses. Then you can commission or discount on issue of shares or debenture. Sir, you told that shares cannot be issued at a discount, then why this point has been over here? Discount on issue of shares can be done in case of sweat equity shares, and there are further two more exception to the point we will be discussing, nothing to worry. Then comes premium on redemption of redeemable preference shares and debenture. Premium, whatever premium you have to pay on the redeemable preference shares or the debenture. Then buyback of own shares. So under these circumstances, you can utilize the balance. Under these 4 points, you can utilize the securities premium balances. Okay. Then comes the prescribed companies. Prescribed companies under section number 133. What they can do is they can utilize the securities premium for the bonus issue, for writing of the commission or the discount, or for the buyback. Okay, the one point which is missing over here is this premium on redemption is not over here for the prescribed companies. Okay, so prescribed companies, you can refer section number 133 of Companies Act. Okay, then comes auditor have to check that whether the transfer of premium to the securities premium have been done properly or not. Then auditor have to verify that use of account have been complies with permissible purpose. Whatever purpose for which the securities premium balances, it has been utilized or not, auditor have to verify it. Okay, apart from the permissible purpose, the things are not misused by the management, you have to take care of that. Okay, then comes under what circumstance share can be issued at a discount. Generally shares cannot be issued at a discount, but there is one exception to the point, which is sweat equity shares under section number 54. Then shares can be issued if suppose shares are issued at a discount, then they are called as void. Then there is some exception to the point that when the debt is being converted into shares under a scheme of statutory resolution plan or debt restructuring as per the RBI or Banking Regulation Act, under such circumstance share can be issued at a discount. Under what circumstance? When the debt is being converted into shares under statutory resolution plan or debt restructuring plan as per RBI or Banking Regulation Act. Under such circumstance share can be issued at discount. Okay, I hope you are getting it. Okay, and if suppose the company issues shares at a discount, then what will be the penalty on the company or on the behalf of person who is dealing with the company? Okay, so the company and every officer who is in default shall be liable for the penalty, which is the penalty amount, what will be the penalty amount, whatever the amount raised. For example, 10 lakh rupees have been raised by issuing shares at a discount, or 5 lakh rupees, whichever is less. Okay, along with that they have to refund with 12% interest from the date of issue. Okay, so they will be refunding to the people from whom they have collected the money by issuing shares at a discount. They have to repay them along with 12% interest from the date of issue. Okay, so what auditor will be verifying needs to check the movement in the share capital during the year, and auditor have to make sure that there is no shares have been issued at a discount by reading the board meetings, board minutes or the shareholder minutes, or he needs to verify the issue price. Okay, and if discount only in case discount of shares can be issued only in case of creditors. Okay, they can be issued to creditors. Verify the conversion of debt align with the RBI guidelines. They have to, auditor have to make sure that RBI guidelines have been properly done. He has to check and verify it. Okay, only in case of conversion of debt. Okay, then comes issue of sweat equity shares. Sweat equity shares are nothing but ESOPs. Okay, so sweat equity shares are issued to employees, directors at a discount or a consideration other than cash. These are being done other than cash in exchange of know-how, IP rights and value additions. Okay, so what audit procedure auditor have to do is, same class of shares are already issued. Okay, then issuance authority by the special resolution must state that number of shares, market price, consideration, class of director and employees. If in case of listed company, it has to follow the SEBI regulations. If in case of unlisted company, it has to follow the rules. Okay, auditor have to check the rules whether the company is in compliance with all the rules and regulation as per the Companies Act 2013. Okay, then the sweat equity share have the same rights as that of other shares as pari passu. Okay, all the other equity shareholders, they have the same rights to that of the sweat equity shareholder. That means sweat equity shareholder have the same rights to that of other equity shareholder. Okay, then comes reduction of capital. Under what circumstance a company will be thinking to reduce the capital? Okay, one is when they have huge accumulated losses or unsound investment they have made it, the company have made any unsound investment, or they feel that they have excess capital. Under three circumstances it can reduce the capital. Okay, then comes must keep the capital intact. Always remember, the company have to keep the capital intact unless permitted by law. Okay, unless and until the law says that there should be reduction in the capital, it has to keep the capital as per the requirements of the provision. Okay, then comes what is the audit procedure. This we will be covering in our chart notes, you mean handwritten notes, nothing to worry. Okay, so the story over here is company, tribunal, entries, schedule 3 and disclosure. So this is the story. Okay, so what is the audit procedure auditor have to do for reduction of capital? Okay, what things auditor have to verify if there is reduction in the capital? So first the auditor will going to confirm MOA alteration, AOA allows to do the reduction of capital, and verify the shareholder meeting. Obviously, just imagine if the before the capital was 1 lakh rupees, now the capital have been reduced to 60,000. There will be some discussions between the shareholders. So auditor will going to verify that shareholder meeting, what discussion have been, why they are doing it. Okay, for what purpose they are reducing the capital, and there should be no default in the deposit repayment or the interest. So these 4 points are related to the company. Then comes tribunal related points. Tribunal order have been filed with ROC. Whatever tribunal has passed the order, that has to be filed with the ROC, and auditor have to check compliance with the tribunal condition. Okay, auditor have to check whether whatever tribunal condition it has been fulfilled by the company or not, it has to verify it. Okay, then confirm and reduce add to company name. Okay, whenever a company reduce its capital, before their name, company's name, they used to write reduce. Okay, so reduce add should be added to the company name. Okay, so this is related to the tribunal point, company related point 4 points, and tribunal related 3 points. Then just imagine the capital have been reduced from 1 lakh to 60,000. So something debit would have been done and some credit would have been done. So auditor will going to vouch the entries and verify the schedule 3 compliances. Whether all the schedule 3 compliances have been done or not, auditor will going to verify. Then comes check disclosure of asset revaluation. Okay, so these are all the points when auditor have to take care. So the short story over here is company, tribunal, entries, schedule 3 and disclosure. Okay, so this is the short memory story related to this point. Okay, then comes we have covered all the points over there. Okay, then comes exemption from buyback of securities. Okay, under reduction of share capital, if a company reduce its share capital, then it cannot do buyback of shares. Okay, so buyback of securities cannot be done. Okay, so auditor must ensure that section number 63 compliance if buyback is done. Okay, if buyback is done, then auditor will have to check the compliance of section number 68 has been done or not. Okay, then comes reserves and surplus. Okay, Okay, there are two types of reserves. I'll just say it very short. One is revenue reserve, another one is capital reserve. Revenue reserve talks about the profit which are distributed to the shareholders, or it can be used for the purpose of divisible profit or business expansion, working capital, or financial strengthening the financial position. For these purpose, revenue reserves can be utilized. What is meant by capital reserve? Capital reserve cannot be freely distributed. It cannot be freely distributed, and it has some limited purpose. Okay. Then what is the example of capital reserve? One is securities premium, which we have already discussed. Another one is CRR, okay, capital redemption reserve. Okay. Then comes one important situation where in case revenue reserves are being transferred to the capital reserve. Okay. So under what circumstance this will be happen is when a company wants to replace a new plant and machinery. Okay, replace the old plant and machinery with the new one. At that point of time, the company can feel so that revenue reserve has to be shifted to the capital reserve. If the revenue profit are apportioned to an asset replacing reserve for a capital purpose, the reserve becomes the capital reserve. Okay, I hope you are getting the point what I am trying to say. Then comes what is the source of capital reserve. Source of capital reserve is nothing but one is the sale of fixed asset through which you can gain the capital reserve, or profit on sale of shares through which you can gain the capital reserve. Then utilization or realization of capital reserve. You can utilize for writing of fictitious assets or losses, or bonus issue. Okay, for issuing bonus shares also you can utilize capital reserve. Then comes a specific legal restriction which we have already seen. Securities premium, there is prescribed things. Under only 4 circumstances the securities premium reserve balance can be utilized. We have already seen it over here. Okay, under 4 circumstances, 4 purpose under which it can utilize the securities premium balances. Okay. Then comes here also what is the audit procedure related to reserves and surplus. One is existence, completeness, valuation. So what is the procedure? First you will going to trace the opening balances, then profit and loss. Okay, you just imagine under reserve profit and loss item will be there. Okay, so dividend related item will be there. Okay, dividend also comes under reserves only. Okay, so under dividend what auditor have to verify is the board or shareholder resolution, and it has to make sure that AS number 4 or Ind AS number 10 have been properly complied. Okay, for securities premium what an auditor have to confirm is shares have been issued at a premium via board resolution. So auditor have to check the board resolution, and auditor have to also check whether utilization is as per section number 52 of Companies Act related to securities premium balances. Okay, I hope you are getting it. Okay, then comes borrowing related point. Okay, borrowing is nothing but existence audit procedure. What are all existence audit procedure? Existence, what is meant by existence is all borrowing on the balance sheet date represent valid claim by bank or the other third party. Okay, so what is the audit procedure? Nothing to worry. I have created a handwritten notes for that also. Beautiful flow is there. Okay, whenever a company wants thinking to borrow capital from a bank or financial institution, first it will going to discuss with the board of director. So first auditor will going to review the board meeting minutes. Okay, then he will going to get the agreement, okay, related to the loan. Okay, then he will going to get the balance confirmation, whatever balance is been outstanding as on the 31st March 2000 something. Okay, so balance confirmation will be done. Then agreement of lease or hire purchase creditors he will be going to get it. Then debentures are also comes under borrowing. Okay, so by issuing debentures also a company can raise the funds. So for that auditor will going to see the trust deed, and he will be reading all the terms and condition. Okay, if the debt is retired or repaid, he will be seeing that whatever charge has been created over debt that have been removed or not. Okay, then obtain written confirmation. So these are all the things auditor will going to verify. All these points which are already been written over here in detail. Okay, I have just created a flow of all the main keywords, so nothing to worry. Okay, So first, what is the point? First, they will auditor will going to review the board meeting minutes. He will going to obtain the agreement, loan agreement, balance confirmation will be done, agreement related to lease or hire purchase, debenture related, he will going to obtain trust deed and he will be reading all the terms and condition. If the debt is retired or repaid, whether auditor will going to check that all the charges have been waived or not. Okay, then he will going to obtain written representation as well. Okay, so these are all the total 7 points related to borrowing, existence, audit procedure. Okay, then comes completeness. Okay, here comes the completeness. What is the audit procedure? Completeness talks about all the borrowings have been accounted for. Okay, whatever borrowings a company have done, all the things have been accounted in the books of accounts of company on timely basis. So what is the audit procedure we auditor have to do? One is he will going to obtain schedule of borrowing. Okay, through schedule of borrowing he will be verifying the opening balances, that is the closing balances of the previous year, whether it has been properly brought forward or not. Then if there is any additional borrowing, he will be seeing whether during the year any additional borrowing have been obtained by the company or not. He will be tracing the closing balances. Then he will be reviewing, auditor will be reviewing the subsequent transaction, that is any fresh loan have been obtained near the balance sheet date, he will be checking it out. So one is he will be obtaining the schedule, additional debt, closing balances, and review the subsequent transaction. So opening and then some purchases related, this you can treat it as purchases related, like additional debt, and then closing comes and some subsequent transaction, intermediate transaction. You can just remember the flow of this 4 particular points. Okay, then comes very important, which is related to direct confirmation procedure. Direct confirmation procedure is nothing but ascertain that confirmation includes all relevant data related to interest rate, what is the due date, what is the collateral, what is the security, etc, etc. He will going to send the reminder for non-response. Okay, whenever there is a non-response from the bank or financial institution who have provided money to the company, he will be sending the reminder to those banks and financial institution. Then he will be comparing the balances in confirmation with the books, ask for the reconciliation, and supporting documents he will be asking. Okay, so these are all the 3 points you have to remember related to direct confirmation procedure. Then comes valuation related. Valuation is nothing but liabilities recorded at correct amount or not. Auditor have to do what all procedures related to this. Okay, so here comes a total 19 points. Okay, I'll be discussing it out in a very quick flow. You will be understanding very accurately in a logical flow. Okay, just let me just show you a loan agreement, how it looks like. You can see that loan agreement, this is a loan agreement, lender name is there, borrower name is there, the registered office is been written over here, CIN number, corporate identity number is there, and what is the purpose of borrowing? 5 crore rupees hire purchase agreement. Okay, then what is the terms and condition of loan? Loan is given at rupees, and what is the tenure? Hire purchase agreement detail, foreign currency loan. So all these things, interest, what is the interest computation, when interest has to be paid, what is the accounting policy? Loan is classified as financial liability at amortized cost method, and EIR method will be used. This EIR method you will be learning more about in your CA final studies. Okay, so redemption at premium or discount. So how if it is redeemed at a premium or a discount, then how it will be amortized over the life of the borrowing. Okay, so installment of loan, long-term loan. What is the installment of long-term loan? 1 crore rupees you will be paying at each year end. Okay, then amortization, computation of discount on debt. Then what is the charge being created? Signature. This is how the loan agreement looks like. So almost all the points here we will be covering. First, auditor will going to examine the loan agreement. Then he will going to examine the terms and condition, what are all the charge document, examine the hire purchase agreement, examine the purpose of loan. This also we have seen it, purpose of loan. Okay, then examine the due date. What is the due date? If the loan is repayable within less than 12 months, then it will be treated as short term loan. If it is repayable more than 12 months, long term loan. Then recomputation of interest. Then if it is foreign currency loan, you have to check compliance of AS number 11. Okay, then you need to determine accounting policy, what is the loan balances, agree the loan balances. Then comes long-term loan installment. Okay, so amortization of computation on the premium or the discount on the debt. Okay, so these are all the 11 points, and then further what I'll be yes, these are all the 11 points related to loan agreement, which we have already seen. So the story over here is loan agreement format. You have to remember type of party and companies act related. Okay, so these 3 points, major points. Under that sub points you have to remember it. So what is the type of party? Now we will be discussing it out. Okay, so type of party is, you just see that review the related party borrowing. Okay, so for related party borrowing, you have to, auditor have to see that whether the company has compliance with of AS number 18 or Ind AS number 24. Verify the bank liability. Okay, that is you can borrow from bank also in terms of bills discounted or checks, etc. So you will be verifying it. Then you can accept deposit from the public. So for deposit, auditor have to make sure that the company have made compliance with related to RBI direction and other authorities. Okay, then verify the restriction under 180 of Companies Act. Check the compliance of section number 185 and 186 of Companies Act. So these 2 points are related to Companies Act. So these 3 points are related to types of party. Okay, one is related party, another one is bank, and the third one is deposit from the public. Okay, so this is how I have created the memory technique. So loan agreement format, you have to remember what are all things loan agreement format includes, that you auditor have to examine it. Then types of parties and Companies Act related points, you have to write it in the examination.